Hey everyone, welcome to the KE Report in a daily editorial on Tuesday, June 3rd, chatting with Dave Erfle, founder and editor of the Junior Miner Junky. And Dave, just a lot of good news still in the precious metals sector and even in the commodities sector broadly, but we'll focus on precious metals, especially on the back of yesterday's action, because yesterday we saw gold and silver especially, move really strongly. The underlying stocks also moved well from the large caps down to the juniors. It was an across the board strong day for the precious metal stocks. We even saw oil, copper, those move up strong yesterday. Now, a lot of that I think was predicated on some more war news, some more tariff news, negative news on the tariff front that drove, I think, the underlying commodity prices higher, but it was the follow through from the stocks that was really encouraging. And again, something I've been saying over the last couple of weeks is that we still want to see these big guys moving. I realize that rotation of money down to the juniors is encouraging, especially for all the people invested in the juniors and the juniors that have lagged. But if we keep getting leadership from the top of the food chain, that just is better, I think, longer term for the sustainability of this bull market. So, Dave, give us your rundown of yesterday. Again, it was fundamental news, war and tariff news that I think really drove the commodities, but especially the precious metals. But it was the stocks that also, in a way, outperformed, showing more strength. So, your takeaway from yesterday?
Yeah, I mean, it really wasn't a surprise because you saw these stocks, and especially the juniors. You were seeing the silver stocks and precious metal juniors leading the gold stocks higher, while the gold price was still consolidating in yet another symmetrical triangle, and it was at that apex. So basically, the miners and especially SIL was telling you that this breakout was likely to happen during the first week of June, and it happened a lot sooner even than I expected. It happened on Monday. I told my subscribers that we should expect a huge move in either direction, especially in silver, because it had been making that sideways consolidation move for such a long time after that spike low, and then it was bought right back up, and then it consolidated that move there in a bullish flag. So with SIL leading the gold stocks and the juniors, especially leading the precious metals stocks, it was pretty much a given that we were going to have a breakout to the upside. Like I said, I just didn't expect it to be so soon. I mean, if you take a look at what's happening with global sovereign debt, the U.S. debt situation, what's happening, geopolitically, all this tariff back and forth. I mean, this is a perfect environment for gold. That's why it keeps rising, and then it has a sharp move lower, and then it consolidates within a symmetrical triangle, and then it breaks out of that symmetrical triangle. I think this is the fourth one that it's broken out of on this move. And now it's target. I wouldn't be surprised to see $4,100 gold before the end of the year. I mean, you've got institutions like J.P. Morgan forecasting that gold will go to 6,000 by the time Trump's second term ends, and now you've got Goldman Sachs advising people to buy oil and gold instead of U.S. treasuries, which used to be a former safe haven. So treasuries are not only a former safe haven, uh, and in relation to the gold price, gold has now replaced bonds as the safe haven.
Yeah, Dave, I think it was telling yesterday that bonds were down and the dollar was down, which were also, dollar being down was a tailwind for the whole commodity sector. But the fact that they weren't getting the bid as a safe haven if it was war news and the tariff news was very telling, and gold was getting that safe haven bid. But I think it's even more interesting that silver did so well yesterday because it's not a safe haven asset the same way that gold is. Central banks aren't buying silver. You're not seeing people run to shelter their assets in silver, but it does have that precious metals component and it does have that commodities component that kicked in. And you said SIL did good, but look at SILJ yesterday. It was up on huge volume, up over 7%, and that's even a better read on the silver stock. So are you getting excited that the animal spirits are hitting all parts of the sector, but finally are trickling down into the juniors?
Oh, absolutely. And the silver move is in relation to that US dollar index move that you mentioned. The USDX had really strong support at 100. That was psychological and technical support for so long, multi-year support. It broke that recently, and then it moved back up above there and went up to back test 102 where there was some resistance, and it came right back down. So now it's firmly below 100. And if we get below 98, the next support is 95. So that really helps silver. And of course, it helps gold as well. But yes, I mean, it's when you have the higher risk juniors sector, especially like you said, the SILJ, which is even higher, like, these silver juniors are even higher risk than the gold juniors. When you see those leading, that is very bullish for the sector, especially when it's leading the gold price, because the gold price is, like I said, it's now breaking out of that symmetrical triangle where the juniors, silver stocks, and even the miners were already breaking out ahead of that.
Dave, when was the last time you've seen this sort of positive action for precious metals and the precious metal stocks?
Well, it's the first time we've seen this kind of action since the 2020 spike low. But that one was over really quickly, right? It lasted not even 6 months. And the bullish up leg before that was in January 2016, and that one only lasted 6 months. This one has a lot more staying power, I think, because if you look at everything that's going on with the reasons why the gold price is going up. And a big thing to look at also is gold started this really sharp move after we had that 13-year cup and handle breakout at 2100, right? That happened last March. And gold went from 2100 to 3500 in a little over a year. So you take a look at GDX and GDXJ, they're breaking out of very similar cup and handle patterns. Sure, granted, they're only 4 years, but they're very powerful. And you take a look at GDX and GDXJ on a monthly basis, they're the most overbought they've been in their history. They've never been this extreme overbought, and yet weakness continues to be bought, and sector rotation is really starting to happen now down into the higher risk juniors.
Yeah, Dave, it's also interesting that it's happening in the face of what's typically a sell in May and go away summer doldrums period. And instead, we're seeing people hit the bid. So that's also interesting, the seasonality of it. Let's talk portfolio management, though. I mean, you're managing a portfolio for your family, you're sharing it with your subscribers. There's a tendency to sometimes overtrade, and you've been a staunch supporter of the be right, sit tight, old turkey time from Jesse Livermore. But are there moves that you're going to make at different points in the cycle to rotate down the food chain? And when is the appropriate time to do that? And how do you avoid over trading?
Oh, yes, and I've already done that. First of all, you have to have your rules set in place beforehand, right? We've had all this time to accumulate the proper juniors, and hopefully we got into the right ones that'll go up the most while this sector is really breaking out now. So, like I said, you basically have your own rules set in stone ahead of time. And one of my rules, as I've mentioned several times before, is I will not go into a junior unless I see at least 3 times upside. And when that junior hits that 3 times upside, I'm going to go ahead and take 1/3 off the table. That's my original investment, and then let the rest ride. But uh, saying let the rest ride is not completely the end game either. If the stock continues to go higher, bifurcate even higher than others in your portfolio, I like to continue to trim it. It becomes 15% of my portfolio. So I don't invest any more than 5% into any single junior. And when it becomes 15% of the entire portfolio, I'm going to trim some more. There's one stock that I've done that I've had to trim twice now, and that's Montage Gold. It's gone up so much since we got into it. It's been a 7 times gain, and I had to take a little more profit off the table recently. So there's a few more that are coming up on 3 times gains that I'm going to have to sell 1/3 and let the rest ride. And meaning let the rest ride is, the ultimate goal for when you get into these juniors is a takeout by a major. But of course, you don't want it to happen too soon, because you want them to run as much on their own as possible before they get taken out, hopefully at a large premium.
So, Dave, since I guess you are reallocating in a very limited sense, let's say, what about metals wise? Since silver has lagged so much, are you a bit more, not overweight, but heavier weight in the silver space?
Yes, I've been overweight in the silver space for quite some time because let's face it, when you see the gold silver ratio reach 100, I mean, you really start to rub your hands together and salivate because that's only happened a few times. And the last time it happened was during COVID. We had that spike to 124, and it set up a huge move in silver, and especially in silver stocks. So I've got 11 of the 20 positions in my real money portfolio in my newsletter have silver exposure, and several of them have huge leverage to the silver price. And we're really starting to see these things move. I mean, a couple of them that are in my top 10, Vizsla Silver and Abra Silver, they're breaking out of these huge bases and they've got no overhead resistance. And the bigger the base, the higher in space these things move. I mean, during the last bull market, my two largest gainers were silver stocks. And I did really, really well. It basically changed my life, the gains I made on those two silver stocks.
Yeah, Dave, I always say if people like gold stocks, then you got to love silver stocks because when they play catch up. But we're finally at the point where they are playing catch up. Let me ask you this. If a lot of them you're waiting for the takeover, what about some of these development stage companies that are actually signaling to the marketplace that they're going to build their project? I mean, I think you have a couple of those in your portfolio. Are you actually wanting them to build it, or are you hoping that they're just signaling that so that they still get taken over?
Oh yeah, I'd much rather see them get taken over, but you have to signal that to the market. You have to prepare to build it yourself. You don't want to shout out to the market and say, "Hey, we're a takeover candidate. Come and take us over." You basically want to start hiring the right people to set up a situation where you're going to start building this thing. And Vizsla Silver has done that. So yeah, I mean, I'd rather see these companies you know, basically signal to the market, hey, we're very capable of building this thing ourselves, and not only that, but we're acquiring more property in the district. So hey, we could even see a situation where we sell this project to a major and then spin out our company because we've got all these other projects as well. That's what you really want to see when you're accumulating a takeover target. It's always nice if they have another property kicker that they can spin out and do it again. Because I've got a couple companies where I've rode the coattails of management who have done that for me in the past, where they were during the last bull market, they got taken over in a nice premium, and the property that they spun out to create a new entity. That entity now is breaking out of a huge base and it's going higher. And they've also got another property where they can spin it out and do it again. And the management team's young enough where they could do it again.
Well, that's just the thing, right? You always want to see these companies continue to move forward. They can't just sit idly by and slowly drain their cash reserves. You do need to do stuff. That is what Vizsla Silver has been doing. But Dave, what about the top of the food chain? Because it has been a consolidation at the top of the food chain over the last 5 years, I guess. We've seen majors come off the board, and then we've even seen the majors focus more on copper assets, bringing those into their portfolios. We've seen now, I believe, I'll classify it as one combination of mid tiers moving up to the major category. Do you expect to see more of that? These mid tiers trying to merge, combine with each other to become majors.
Right. Yeah. I mean, if you take a look at something like Alamos Gold, they're getting into the major category. B2 Gold has gotten into the major category. Yeah, you definitely want to see that. You want to see them continue to grow, get a bigger market cap, more liquidity, and attract more investors. Because let's face it, investors, and assets under management. If you take a look at ETFs, in the miners and in gold in relation to ETFs in other sectors, we're still in the early innings of this bull market. I mean, not that much retail in this sector yet.
Well, Dave, I know you've mostly focused on the developers that could be takeover candidates, or maybe they're moving forward with the build, or growth-oriented gold producers and silver producers that are in the junior side that have a lot of growth and exploration. But is there a point where you're going to get a wild hair and go down into the drill plays or the prospect generators?
Well, it's happening now. I mean, the wild hair is higher risk, earlier stage PEA stage companies. Last week, I issued a buy alert and purchased shares in a PEA stage company, and it's already up 13%. So that's as low as I'm willing to go right now. I'm still not willing to get down into drill plays because there's still so much value in these PEA stage, feasibility stage companies that there's really no need to take a flyer on drill plays just yet.
Yeah, that's so true. And there's so many of these PEA stage companies too, or companies that could be going through a PEA if they wanted to. Dave, what about the aspect now that so many of these companies are cashed up and not just lights on money? They're cashed up to do work, whether that be early stage drilling or advancing through economics. Still, a lot of companies need to cash up for builds, but you got to expect that that money is going to start coming in. So now that it seems like the financing risk is off the table for a lot of companies, how does that change your outlook?
Oh, that just makes me even more bullish, right? And if you're looking to get into some of these things that have already broken out, you think you've missed the boat. I mean, like I said, they're breaking out of these huge bases. Look at the ones that with tight share structures, especially at the ones with little to no warrants for an overhang that can act as roadblocks as the share price goes higher. I mean, those are the stocks that are going to go up the most, especially if they have a really tight retail float. And especially even further, if they have a really tight retail float and a US big board listing, because there's really not a lot of room to get in when the general public starts to get FOMO in relation to juniors, and especially into these companies that are takeover tech candidates.
Dave, you bring up an interesting point too about the warrants. So let's maybe dive in there for a second. For people not familiar with it, one of the biggest mistakes a lot of people make when they get into this space is they don't watch how companies raise money and they don't watch how judicious they are as far as not issuing too many warrants. So maybe describe for people what happens in a warrant overhang, and do you think that companies that are issuing warrants now, when we have this kind of a bullish market, are actually taking advantage of investors?
Yes, absolutely. I mean, if you're having to attach a warrant to your finance now, that's the market telling you that, hey, your project is still super high risk and I need a warrant to take a flyer on it. Because you want to, because most of these companies now can easily raise money without a warrant, and they could do it pretty much at market. They don't even really have to add much of a discount to market. So that's the companies, that's the stocks that you want to look at. But yeah, I mean, see, when we had this bear market in the junior space, even as the gold price just continued to go higher, the juniors continued to act really moribund. Sector professionals were taking advantage of the marketplace. They would come in and they'd see a company that would produce good news on drill results or what have you, and then they'd look at the balance sheet and they say, "Oh, look, the company's going to need money, so let's not only wait for a financing, but let's sell the stock short and get the financing even cheaper and get a warrant to boot." So that's not happening anymore. That is huge. So basically, you had a lot of time to look at these companies and collect the right ones that didn't have a lot of warrants. But let's say you've done so in the past few years, but in order for the company to keep the lights on, they've got this fantastic project, but they're not getting any love from the market. So they had to continue to raise it at lower prices. So now they've got a blown out share structure, and some of them even have a lot of warrants. And what those warrants do is they act like roadblocks as the share price goes higher. So each time that a warrant price is hit, right, they're exercised. Sure, the company gets more money, but it also releases more shares into the market. So you basically want to take a look at these companies that maybe have 150, 100 million shares out and maybe 3 to 5 less than 10 million warrants or no warrants at all. Those are the companies that if they're breaking out, they're gonna run the farthest because there's not a lot of shares out there.
It's so true, but some of these companies, hey, they have 500 million shares outstanding, unfortunately, but some of them are also rolling it back. This is actually not a bad time in the market to roll back some stocks because of the bullish nature that we are in. And hey, we're all just enjoying the ride right now. Hopefully, whoever bought in the last year, you have to be up, or I'd assume you'd be up in your stocks. And now it's just about making sure that the companies you're in keep moving higher. The market helps with that, but also having a strong strategy. And I like these companies issuing 2 to 3 to 4 year guidance on what they can do, because that's what the market likes to hear. Plans of how they're going to keep growing rather than just financing time and time again. But hey, right now, Dave, it's a good market, and these stocks are really joining into the party. Again, Dave Erfle, founder and editor of the Junior Miner Junky. Dave, great chatting with you this week. We'll connect next week.
Thanks, guys. Looking forward to it.